class. Okay, so I've gathered time to do this class again. And I'll think on Saturday, I'll have another question and answer session with you guys, right? You guys might have had questions piled up. Sorry, I've been very, very busy. February was not for me. So this meeting is recorded so that people who did not attend the last class will definitely come back and watch this video. Now, this is the stacking video, confirmation entries. I'll be talking on stacking, I'll be talking on confirmation entries. Now, I'm going to use two examples. So if you have any question you want to ask me, I don't get questions, so just write it on the comment section, right? Now, let's talk on how to maximize stacking. How do you want to maximize stacking? How do you want to see stacking? Now, I caught a trade on the Signal Free channel yesterday. I caught a trade on V75S. Yep. Now, let's check it out. Yep. Okay. I caught a trade on the free channel. I think this was the buy. Yeah, so we're supposed to take the buy from here and we rolled it up to all the way to what, TP1. You get rolled it all the way up to TP1. Yep. But now let's check. Let's check. I think I took that setup from what? I took the setup from a higher time frame, right? I took the setup from a higher time frame. So let's look out for this. Now, if you look at V75S, you tend to see that we have this sweep of liquidity here. We have a sweep of liquidity on the 4-hour time frame. Then we have this as what? The 4 hours what demand level. Right. We have that as what the 4 hours demand level. Please, if you have any question, please do well to ask me. I'm here to answer you. All right. So we have this as what the 4-hour demand level. Then we have this one as what structural liquidity. Right. So now let's see how would you have maximized this opportunity? Now, I told you guys that if you have a higher time frame setup, you want to take what? You want to take your entries from the lower time frame. You want to have your entries from the 5 minutes, 10 minutes, and 15 minutes. So if you spotted out a setup like this on the higher time frame, what you want to go to do is what? You want to look out for lower time frame entries, confirmation entries. Even when I drop the signal on the free channel, I told everyone, go and look out for what? Lower entry for the buys. Now let's go to the 5 minutes time frame. Let's go straight to the point. I'm not here to waste any much time. Now, let me delete this one out. Now, if you look at the 5 minutes entry, we saw that we had what? We had this as what? Our POI. This was where market tapped into our POI. Now, this black line is our POI, right? We want to look out for what? Candlesticks confirmation entry. Now, we have this as what? Our 3 candlesticks pattern, right? I taught you guys on. Have our 3 candlesticks pattern. This is a morning star. You get. Now, if you want, let's say you want it to stack. Now, this has to do what? You want to target the nearest high for your take profit. Now, let's say you want it to stack on such a pair like this. How can I find my entry? I know those are the most questions you guys ask yourself. How can I find my entry? Oh, I have a small account. How do I want to flip this account to maybe $100, maybe $200, maybe $3? Because practically from this kind of such a trade, this move alone would have gotten you from $10 to what? $800. Oh, sorry, $500. Let me not be extravagant here. You understand? So you're like, how do I want? Now, the first thing you want to look out for is what? You want to look out for candlesticks rejections in POY level. You get. Now, first, you see that what price will first, before any confirmation price gives you, price will definitely give you what? A candle wick. That's why you hear me saying candle wicks, candle theories. You get. You want to see what? Want to see price giving you these rejections from your demand level, your 5 minutes demand level. You get. Price will give you what? The rejections we have here. Now, take for instance, you were so good enough to have your entry from this point. let's say from that dodgy, that would have been the best. Because normally for me, I would have started stacking from where we had this dodgy before price even closes above this one. That is just the theory of stacking. You want to be able to read what? Once you're able to read candlesticks, stacking is not hard for you. Now let's take for instance, you waited for the close of the morning star. It's still what? It's still a sniper entry to the upside. Now, in some cases, you tend to find out that you might have missed the 5 minutes confirmation. Then you which other time frame do you want to now look out for confirmation is what? The 10 minutes. Now let's check what the 10 minutes gave to us. Now, if you see the 10 minutes, what do we now have on the 10 minutes is that we have what? An engulfing candle. Can you see the engulfing? Still have the sniper. But now there are two things to the engulfing candle. Now, in most cases, price might not do this in most cases. After the engulfing, it just goes up like that. In most cases, you might have that 50% retracement to the downside before price push to the upside. So you want to be able to be careful. You want to be careful in such a sense that if you're stacking here and market does not come anywhere below this, you have another capital to fund if market stops you out. Before you're doing any stacking, make sure that you have a backup capital, even if it's $10, even if it's $5, even if it's $2. Just make sure you have something to fund again. Because you know that you're going what? You're going in full margin. You're betting on what? You're betting on that confirmation entry and the market has shown to you at that period of time. You're betting on that confirmation entry the market has shown to you. Now, if you check what price has done, now if you check, this is the lower time frame confirmation entry. If I wanted to find another entry on this and type it, I would have taken out what this POI. Maybe I'll still do what? I'll still want to look out for a buy at this point on this 75 is. Because my bias on this 75 is what? Is still bullish. I'm still bullish. Then I'll take this as what? My nearest liquidity. Then I have this as what? A sweep of liquidity. That's why I keep saying, I say this a lot that if price gives you this on your higher time frame, price give you your setup on your higher time frame, you get your lower time frame, you definitely have this setup here. So let's say this is your higher time frame POI. Then you come to what? You come to your lower time frame. You can find this as what? A re-entry. So I think that's what is going to happen on V75s. So we have this. So this first POI is what? Your higher time frame. Then you come to your higher time frame. You want to now look out for what? You want to look out for entries. You now take your entry from what? From here. Once price has shown you that it's now becoming to be what? Bullish. You get. Now, if you go to the 5 minutes, let's look at the 5 minutes. Now, if you check in this case, what did you see? Now, I said the same thing. You want to see what? You want to see candle rejections. If you're able to spot out clean candle rejections, that is when you know that you're good at what? Stacking. You get. You're able to spot out clean candle rejections in what? In your POI. If you're able to get your entries at such levels like this, sniper is not far from you. On the 5 minutes, you look out for what? Those candle rejections, candle rejections, candle rejections. Although this one price did not give us a confirmation entry on the 5 minutes. Let's check the 10 minutes. Yes, still no confirmation. But if you're able to get what? You're able to stack on these rejections, you understand, and ride it to the upside. So what am I trying to say? Whenever you're trying to stack, you must make sure that you've gotten what? You've gotten your entry first intact. Now, after getting your entry phase and candlesticks pattern intact, because this class is not a class of candlesticks, we have already talked on candlesticks. I sent the candlesticks Bible for each and every one of you to go study on, right? Now, after getting your entries intact, what else you want to look out for is your equity. Now, I've taught you guys how to do what? How to divide your equity in such cases, even when you're stacking. Let's say you have $100 capital. You don't want to go all in on the $100 on your face trade. You want to be able to divide it. Is that either in two places, either in three places, either in four places? You understand? That's how you manage risks when it comes to stacking. So that in case market stops you out, you fund again. Market stops you out, you fund again. In case market is still around what? Your POY level or what? Your demand level. After stacking, you want to be able to do what? You want to be able to spot out what? A margin of each of those pairs you're trading. You want to know their margin. You want to know what one position costs a margin from your capital from your equity. Take for instance, for pairs like V25S and V50S, you tend to see that if you open one position, you tend to see your margin counts in $1, which is telling you that it's high risk. That means if you're going in with a $20 margin or a $30 margin, you should guarantee yourself on that trade that at least, if bad as a bad, you will make close to what? You will make close to 1K, 2K on that trade. Now, the higher your margin, the higher your reward. The lower your margin, the lower your reward. Each time you tend to go have trades that you go all in each of those margin, you tend to see that the reward of that trade comes in greater rewards, especially when it comes to volatile pairs. Especially when it comes to volatile pairs. So if you're not, I personally will not advise you to go what? To go full margin for a start. Yes, you don't have to go full margin for a start. Try doing 25% of your margin. Take for instance, you deposited $10. You want to try as much as possible that your margin remains $5. Even if in some volatile pairs, $5 margin on a $20 account is too much. Take for instance, for let's say V50, V25S, V50S. Those pairs are very volatile. $5 margin itself on a $10 account is too much. So you want to be able to do what? If you go to those days that I've been trading this thing, I was trading what do they call it? $10 account. You tend to see that those days when I was flipping $8 to 400, $9 to 2K, $7 to 2K. Most of those trades I went in full margin. But I think the one I did $4 to 800 was on V75S. I did not even go in full margin. I went in with $4 margin, which was still what? A high risk. If there was any slight retracement, market would have closed me out from the market. So you want to be able to, as much as possible, to do was study your margin. They want to study the psychology that comes with stacking. Understand? You can analyze the market, be successful in your analysis, but you can't have a successful trade if you don't have what? A clean entry. If market decides to do you something, if market does not give you a clean entry, it might have a good clean analysis. At the end of the day, you don't make money from that trade because of what? Because of stacking. Just before market wanting to move in profit, market might come stop you out before you go. So you need to sit down and accept the fact that this thing I'm putting myself into, I'm ready for it too. You get this thing I'm putting myself into, I'm ready for it. Anything that wants to happen, let it happen. I'm ready for it. Do you get? I'm ready for it. So, in as much you want to start to stack, you get stacking is something that if you just need one good trade to set you up for life. Just that, be it a $10 account, be it a $50 account, be it a $30 account. Once you've been able to visualize, first, what you want to do is visualize the win first. See yourself having that successful trade first. See yourself having that phase 1K. See yourself having that phase 2K. Do you understand? See yourself visualizing that your phase trade to go your way and you're making serious money from it. You just need one good trade. Take, for instance, you've been trading $10 accounts for a while now, and something happened. You had your phase 1K, you had your phase 2K, which is very possible. If you want to make 2K now, it's very possible. It's on the charts here. It's printed for you there. It's just for you to go in, give it a brutal execution, and make the money. You understand? Give it a brutal execution, sniper entry, make the money. You get. So if you want to make 2K now, it's not hard. Take for instance, you made 2K. I mean, you know that you've made 2K. At least you know that your risk will level up. You start risking $50 per trade. You start risking what? $25 per trade. And you're going in full margin. You get. From there, you grow your capital. From there, you grow and you're good to go. You're not in competition with anybody. As far as you're doing better for yourself, as far as the money is entering your bank account, as far as it's paying your bills, it's okay. Visualize having what? Visualize having that your first big win this year. You get visualize having that your first big win this year. Now, this is a trade I had on what? This is a trade I had on V10 yesterday. You get from this supply level. You get. Now, what did I say you want to see first? You want to see what? Rejections. The same thing over and over again. You want to see what? Rejections. I think this is the last example I'll be spotting out for today. You want to see what? You want to see candlesticks rejection. Now, you're seeing that price has given you what? The first rejection on what? Your POI. What are you now expecting for? Is price to give you what? Confirmation entry. If you're able to get your entry from this side, good and okay. Or if you're not able to get it there, you know that price gave us what? An engulfing. After the close of the engulfing, you enter the market and you have what? Your sniper entry. I know that any retracement to the upside, market will stop you out. It's the same thing over and over again. No matter how no matter how you feel, you've tried to stack, it's not working, or more, keep trying. You don't know when that good trade will definitely come. You don't know when that clean entry will definitely come. You get. Just imagine, look at this sell. I mean, I missed the sell, but look at the sell. This alone can make you your face 2K. This alone can make you your face 3K. You get. Just from knowing when to enter the market. From what? Your POI level. It's as simple as that. Look out for your rejections. After your rejections, you look out for what? Candle confirmation entry. In this case, price gave us what? An engulfing candle. After the close of the engulfing, you stack your trades here and boom, to the downside. If price retraces to the upside, you know it's a two-way thing. You take your loss, you clean your tears and go your way. You get, but it actually works. Just give it time. It actually works. In the long run, it actually works. You just need one win. You get, you just need one win. Any question? I'll be ending the live soon. Any question? In stacking multiple positions, how are you able to open multiple positions at once? Because sometimes you have over 50 positions open. No, there is no app. It's just with your hand. Just do it with your hand. You get, just do it with your hand. The funny thing is that those buttons, those sell and buy buttons there, the more you're tapping it, the more faster it prints out for you. Tapping ta 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 ta. Before you know, you don't open 50 positions. Before you know, you don't open 100. Before you know, you don't open 200. Before you know, you don't open 300. There's nothing special. You just see that it's scared. You open, you do like this, tap, tap. You calm down. Let me show you how some people used to do. We do that thing, ta 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 ta. They'll calm down. Body go dey shake. They will go check, come back, go dey again, ta 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 ta. No. If you're doing it, enter at once. Just do it at once. Ta 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 ta. So you're okay. Full margin. They show you not enough money. You know, say, okay. Before you know, that candle go drop. Before you know, $100. Have you ever entered a trade and one candle still gave you $500 before? Something like that. So that's it. It's not an app. Please check your DM, you know. My DM no easy now. My DM. If you message me now, before you know the next second, the thing don't go down.
Mr. V, can I talk here?
For margin, can you please re-explain that in line with your capital? How do you use margin in calculating how much you risk? Now, it depends on the pair you're using. You get most of these pairs, they have their different margin. You will just see them once you've added a position, you see that your margin tends to count. Now, the whole concept about margin is that the higher your margin, the higher the risk involved. The risk you're putting on your capital is high. Then the other side is that if that trade goes your way, you will make crazy amount of money from that trade. Now, the chance of losing that account is very high. You get what does your margin does? Take for instance, you enter the trade with $1 from a $50 account. Now you have a spare margin of what? $49. Abi, you have a spare margin of 49. Now, what does margin does is that if there is any retracement to the opposite ways, that capital will hold $49 of the retracement. I don't know if you guys are getting me. You enter the trade with a $50 account. Your margin is $1. Your margin is reading $1. You have what? You have extra $49. You get. Now, if there's any retracement, if that retracement is worth taking $49, once it has reached $49, that's when you now have what? A margin call. Do you understand? That's when the M7 will now show you that you have a what? A margin call. So in that same way, once you've entered the margin in such a way that the margin is much, let's say you entered with a $50 account, your margin is reading what? $40. The retracement that account will hold is what? A $10 retracement. Anything past more than $10, you get what? A margin call. That's just the concept about the whole margin stuff. Then if the trade goes your way, you have what? High risks, high rewards from that trade. It's as simple as that. Any question?
Mr. V, I was once saying you should check your DM. So, good morning. Sorry, can you hear me?
Yeah, I'm hearing.
Hello.
I'm hearing you. I'm hearing
Yeah,
you.
good morning. I was the one asking you to come to your DM because I noticed you just ignore maybe because of too much messages or something like that. I was expecting your feedback on that thing you said to me the other day.
What was that?
The when you requested for my what's it called? Wallet.
Okay. No, wahala. I'll hit you up today.
So
So
should I still come to your DM or
I'll hit you up today. So
okay, no problem.
any other question? Yet? Any other question? All right. So just try. See, that's just it. Just know your confirmation entry that will save you. Once you're able to master confirmation entry, to take time. You get lose. If you're losing, keep losing. You get accept the losses. Get, but just know that it won't always be like that. You get it won't always be like that. Before you're seeing anybody doing well now, know that those people they don't go through a lot. So I know it's in my eyes don't see for stacking. So if you're opportunity to lose very well. You get, but just know it won't always be like that, right? So all right, so have a nice day, everyone. You get as time goes on, we'll still have more sessions like this to review, have class reviews and trade reviews. All right. So good day, everyone. I'll drop the recording on the recorded session. All right. Take care.